What's up, everyone? My name is Hima, and this is my good friend Tim. Today, we are doing a market scan of the entire crypto market. We're going to talk about Bitcoin, Ethereum, and of course, ADA, all these famous coins. And of course, we are looking into a little bit of stocks as well. Tim, introduce yourself to the people.
Hi, everyone. So, my name's Tim, and I've got a crypto channel as well. And like on my channel, we talk a lot about the macro side of things. So we're looking at what Bitcoin's done in this cycle and compare it to previous cycles. So what's happened in 2013, 2017, 2019. And we also have a look at the stock markets and see if there's any correlation there. And there does appear to be some correlations with the macro markets in general. So so that's my take. That's my, I guess, niche on crypto is more around the macro side of things and looking at the trends rather than looking at like the 1 hour charts or 4 hour charts. Although I do look at those, but my main focus is on the big trends that are happening.
Awesome. So you want to start first or should I start first?
You can start first.
All right. So we'll start with Bitcoin actually. Interesting things have been happening. We are seeing some good volume coming in. And of course, we recently broke that resistance level at $41,000. Let me draw a trend line. This one right here. And I honestly think if we finish about this today, then we'll be headed to these 15,000s. I'm talking about the short term, of course. Long term, I'm really bullish on Bitcoin. I think Bitcoin might go to 100,000 or even further. But with the economy, with these Delta variants and all these COVID things, I don't think Bitcoin will achieve that target anytime soon. So my idea is that in the short term, we'll reach this $50,000 mark. We are seeing this. I'm on the daily chart. There's a head and shoulders pattern. So usually this one thing called neckline, and usually the price actually, historically speaking, have a really good, more probability of coming to this this neckline and then crashing down. So this is what happened with Tesla. If you guys want to have a look at Tesla, this is what exactly happening in Tesla. So I think in the short term, Bitcoin will reach $50,000 mark, and then we'll see this $20,000 support level. So, and the other thing is like this volume is what concerns me the most. Like, so this is basically retail traders, and of course you have big hedge funds, right? I think hedge funds are like punting the Bitcoin thing. They want retail people to jump in and they're gonna exit, and then retail people are gonna lose money. So you gotta be very careful. If I'm trading Bitcoin in the short term, I would actually have a stop loss. You need to have a stop loss. It's an important thing. A lot of people don't even know what a stop loss is. And then I'll have an exit point, right? Because I would exit over here. I would enter over here at 43,000 and have a stop loss at 15%, and then exit at this $52,000 mark. And my plan in the long term is to buy Bitcoin if it comes down to this $20,000 mark, which I think will happen in the coming months.
There's a few things to unpack there.
Two things.
And so I mean, I think we're in it's really exciting at the moment. Like we had a couple months there from that May drop to about, was it July, somewhere in July, when we just bounced out, and we had a couple months where it was pretty boring, to be honest. It was going up and down. It was staying inside that 30 to 40 range. It occasionally showed some signs of breaking out. We had that little peak there at about close to around 40K. Then it dipped right back down to the bottom. So it basically just went sideways, not doing a lot. And at least now we've got some excitement. So whether it goes up or whether it goes down, it's going to be an exciting couple of weeks and months ahead. So the first thing I noticed with this recent pump is that very first wave looks very strong. Like it went from about 28, 30K roughly down the bottom to right up to about 41K.
Yeah.
That's a very strong first wave. And if people look into Elliott wave theory, it usually shows things work in about 5 waves. So it goes up. There's an impulsive wave up, and then a corrective wave down, which is that red wave we can see, big one. And now we're kind of working our way up again. And typically that third wave, so up, down, and then 3, that third wave is typically the largest of the 5 waves. So if we're looking at that from an Elliott wave theory, that third wave could, as you're saying, it could put us up to that kind of 52, 53 mark, somewhere up there. It's quite possible. At the same time, there's a risk, and there's a risk that it goes down. So you can see right there, we're actually hitting, I believe that's the 200-day moving average, that blue line. So it's hitting its head there.
I think if you finish above this line in this coming week, then I think they will see probably more upward action. But if you finish below that, like, I think the coming week is really important for Bitcoin. So if you finish above the line, then of course, I think there'll be more upward action. What do you think?
Yeah, I think that is a critical line. And there's another one that's coming down at the exact same time, which is the 20-week. So if you move that to if you make that a 20-week, if you make that a weekly chart and put the 20 simple moving average. Cool. Okay, so what I've got here is Bitcoin on the weekly chart, and the 2 moving averages we can see are the 20-week and the 50-week, and they're just the simple moving averages. So you can see that we're also hitting our head, and we've actually, if anything, we're slightly above. If I zoom in on the weekly, you can see we're slightly above. If I get rid of that line for a second, we're pretty much right on it. To be honest, we're like right on the 20-week. And the reason why that is significant is if we go back through history, I'll just put this into log. Okay, let's clean up what I've got here. If we go back through history, you can see that in 2017, 2018, at this point, this is when we hit our head. We hit our head on the 20-week moving average after bouncing from the 50.
Right. Interesting. Very interesting.
Which is very similar to what's just happened. We bounced off the 50 and we're hitting our head. We can still go up. Like, we don't have to repeat that same pattern. But it has happened before here. And something very similar happened here in I think it was 2020 by this stage, 2019, 2020. We bounced off the 50 and we went above. So we actually went above the 20. But even though we closed above it, see that we've closed above it. So you think, okay, we're all good, let's go up. And then the next candle was red, but it still closed above it. Then we had 2 big green candles. So you can imagine by this stage, everyone's like, yeah, it's back on. And then we had the COVID crash where it crashed through. But if you go back again in 2013, a very similar pattern played out there as well. So let's go back here. So this is 2013, 2014 by this stage. Let's have a look. That's April 2014. So we bounced off the 50. And again, we closed, we got up to, you can see here, we got rejected by the 20 right there. But then the next week we closed above it. And then we had another green candle. So this is a weekly chart. So these are weekly candles. So you can imagine by that stage, everyone's like, we've closed above it. We're, and even here we wicked down and then closed above it again. You can imagine everyone's excited, thinking the bull runs back on. Yeah, this could be a triple peak. And then we crashed through it again, had a death cross there. The Twift on the 20 and the 50. We had a death cross here. After that happened on the 20 and the 50. And we had a death cross here on the 20 and the 50. And now we're following a very similar pattern. Now it's again, no, I'm not saying that's going to happen again. We just have to be careful, as you mentioned, and have stop losses just in case it does that.
Exactly.
It doesn't do that. So
So what interesting is that the 2021 was a event crash. Like it was not supposed to happen, but Corona came and then people started selling their everything, pretty much stocks, and I think even gold went down. The other crashes aren't very they're not triggered by events. They're triggered by, I think, people trading. And imagine if I had the opportunity to go back in time, I would definitely buy Bitcoin at below $1,000. Imagine if that happened. I always think about it. If I have a time traveling machine, I would just go back and get me some Bitcoin and then.
I know. The thing is, like, at the time, you can imagine this, Bitcoin just came out. No one knows much about it.
Yeah.
It'd be pretty risky, like, but then you think, even $100, you put $100 on Bitcoin back in the early days.
No, yeah.
Like, you could throw away, most people could, you spend $100 on drinks on a night out, easy. So whereas people could probably throw away $100 at a speculative investment. So I know we're all kicking ourselves.
I heard this story where a guy during these early adaptations, he bought $25,000 worth of Bitcoin. And now their current value is somewhere around $1.5 billion.
It's unbelievable.
It's crazy.
I saw a story about a guy who had his private key was on his hard drive, and he threw the hard drive out with his computer. And he's been like looking over the junkyards for the last couple of years, trying to find his computer and his hard drive, going through all the rubbish, because he's got, I don't know how many Bitcoins, but he would have, a lot there, and he just can't find it. It's so sad. It's just they've actually done scientific studies on it's better to not have anything at all than to have something and then lose it.
Oh yeah, that's way worse.
Exactly. So, but you can imagine with a child, you give a child a lolly or a toy, and then take it off them, they're going to cry. And adults are the same. You can make all these profits. You have this massive run up here. You think you're rich, and then it gets taken away. That's worse than just being out of it altogether. So it's very interesting. Yeah. Now
that you are in the log chart, I see a trend line, like in the long run from 2015. Like if you draw a trend line, like there's a massive cycle, but like it's following that trend line. If you can draw it, yeah.
So from here?
No, from here in 2015 June to.
Oh, let's go
all the way up.
2015. Oh, way down here.
Yeah.
I see what you mean.
And then
so that type of thing.
It's sort of like following a trend line. So we have 3 troughs touching the trend line. So one in 2019 and then one in 2020. And I'm pretty sure we'll again touch that trend line. This is like, I'm just guessing. It looks like it's following a trend line.
I'll put this in. I'll change it to the 200 week. So that might be what that could be. That's what we're after. Is that right? 200
roughly,
week.
Yeah.
Yeah, that's what I was after. So okay.
There you have it.
There we go. So yeah, that's the 200 week moving average.
Yeah. That's beautiful. It's the first time I'm seeing it actually. Now that you brought it up with the log charts, like, yeah, it makes total sense. It's always touching that trend line, and then I think, yeah, it's pretty interesting.
Yeah, I find it fascinating. I mean, it's always shown us the bottom of Bitcoin, but it also shows us, and I mean, we're going way back here to 2011, and that's as far back as the data goes. It's a 200-week moving average, so there is we can't get an average for those dates, but you can draw a trend line in there, and it pretty much shows us the bottom. But what I've noticed with this trend line is that Bitcoin basically bounces up and comes back to it like that.
It always touches the trend line and then goes up.
Yeah. Every occasion.
Could you measure the distance from the trend line to the toppest point? Like from, let's say, for example, 2008 trend line to the peak? Like how much of a percentage is that?
Yep. Let's have a look. So price range. So pretty much from this point at the peak.
Yeah.
We were
think we went to 19,000. Yeah.
Yeah. What's that?
One
14,000%?
Yeah.
Sorry, 1,400.
1,400.
1,400% from the 200-week moving average.
And then
now we are, we're nowhere near that high. So the peak was there, I believe. Around here. So that we got up to about 440%.
Very interesting.
2019, let's have a look. That's the peak there. About 263%. And then 2013, it's a bit hard because we don't have I have to estimate this one. It was probably down here somewhere.
Yeah.
So that's 18, that's about sort of 17, let's say 1,800%. So we went from 1,800 to 1,400 to 400.
400.
Basically.
And now, is that, do you see a pattern? Like I thought we'd see a pattern.
It's definitely diminishing. So from the bottom to the top, the percentage is definitely diminishing. I mean, 2019, 2020 was like a mini one. I personally count this as one cycle, as opposed to, even though we did come back to the moving average there and reset again. I think this is what puts a lot of people off the scent, because a lot of people are measuring this cycle from here, and they're saying it's the shortest cycle in history. But if you measure it from here, then assuming that was a black swan event that wasn't scheduled, then it's basically the same length so far as 2017.
Interesting. Yeah, the 2021, like I think it's sort of a black swan event, like you said. It was not supposed to happen, in my opinion. And if you take that into consideration, of course, the cycle does add up, and it makes total sense. So you think we might go into another winter or anytime soon, like from this perspective?
Well, my theory on this is that Bitcoin and these cycles are actually correlated with the markets in general. So if you look at the Dow Jones, the Nasdaq, S&P 500, the Hang Seng, which is the Chinese stock exchange, they all tend to follow a similar pattern where they go up exactly like this and come down roughly every 4 years. And we've seen that throughout history. I can bring up some slides if you'd like to see that.
Yes, please.
Let's have a look. I'll bring up the Dow Jones. So Dow Jones Industrial. All right, so this is, I'm going to make it a monthly chart, because we're going to look at some long-term trends here. So I'll change this to the 30-month moving average. So 30 months is 2.5 years. And similar to what we just looked at with Bitcoin bouncing off the 200-week moving average, I noticed that the Dow Jones 300 month, I meant to make that, the Dow Jones bounces off 300 month. So I'll make this into a line form just to emphasize the point. And what I'll do, I'll zoom out a little bit. So if you look at these, okay, that's the 80s. Okay, so that's so zoom in. Okay, so 300. So that's the 300 month is actually 25 years. I'll change this. I'll make this one the 30 month. That's what I was after. These are both important. You can see here that we're bouncing off the 30-month moving average here and here, and here was that black swan event. So typically we seem to bounce every 3 to 4 years, and it's almost like clockwork throughout all of history. And here was like I think that was like a flash crash essentially, And you can see that we recovered so quickly. Like I don't think it's a fluke that we recovered so quickly. The governments have been pumping extra money into the system and so forth, but the market in general, I think, was about to get into its stride. You can see here it's a little bit rocky when it starts off, and then it gets into its stride. It's the same here. It's a little bit rocky where it starts and then gets into its stride. And we're probably doing the same thing here. It was probably just about to take off, and we had COVID, and then it recovered anyway. But if we go back throughout history, we can see this bounce.
That's the 2008 crash, the biggest one we've had so far.
Yeah, so that's it there. Yep. So we started the crash actually in 2007, and we bottomed in 2009. So these are what makes these crashes. I mean, these crashes change the market sentiment, because can you imagine with Bitcoin at the moment, if all of a sudden, so Bitcoin's looking like this, we like that, we went down, went sideways for a bit, and now we've gone up like that. If it did this all of a sudden, went down to 20K, people would buy the dip. It would be a V-shaped recovery immediately, because there's so much bullish sentiment.
And so many buy orders, I'm pretty sure, even I put a buy order at 20K. So those will be triggered and the market will quickly recover.
Exactly. There's so much bullish momentum at the moment that no crash will last. People will buy the dip.
No.
However, if you have a crash that lasts 2 or 3 years, that's when the sentiment starts to change, because people buy the dip. People bought this dip
and then it
didn't work. People bought this dip, didn't work. People bought that dip, didn't work. And then finally, well, that dip, after 2 years of dipping, it's like, okay, maybe we're in a bit of trouble here. And
people get sick of it.
Yeah. So that's why Bitcoin, the idea of having a flash crash with Bitcoin down to 20K, 18K, if that happens, it's not going to last. It's going to V-shaped recovery immediately. Yeah. It's going to take a long sustained, painful crash or painful bear market to actually change the sentiment. It's not going to happen quickly. It's going to have to take months, maybe another 12 months if it's going to go down.
Right. What's interesting about that is, like, I want to show some news that I think will trigger a crash. We have to talk about the economy, right? Like, we cannot take crypto away from what's going on around the world. Like, so many people in these groups that you see, they act like nothing is affecting crypto. And speaking of groups, they're hilarious. So that's actually a common misconception. You have to know a little bit of economics here and there. I'm not saying like you need to have a PhD or anything, just basic stuff, what's going on with interest rates, inflation, housing markets and whatnot. You need these kind of information, because again, crypto is also governed by these same people. So what I want to show you guys is, like, interest rates are actually a real pain in my head. Like, I think we'll see higher interest rates in the coming months. If that happens, how will the crypto market react? I do not know. So I've been looking at these things. Like, we recently got the US job market numbers, and they actually had, hold on, let me pull up this. Yeah, so the unemployment rate actually dropped from 14% to 5.4%. So we are seeing more jobs coming in, and the government is spending more money. And this is this website is called the Fed. So you can see the rate of money spending. Look at this. From 1970 to 2021, we're seeing an exponential increase in the money printing. So what this money will eventually do is we'll have a higher inflation. Inflation is already, I think, higher up, and Fed don't want us to know it. So they keep saying, oh, it's transitory. It's just a bottleneck effect. It'll go away. But I personally don't think it'll go away. I think inflation is here to stay for a while. Of course, we have the Delta variant stirring up all kinds of trouble. I think in this year, before this year ends, the Fed will increase the interest rates. And if that happens, what these big players, these hedge funds, millionaires and billionaires, and they'll take money out from the markets and put it into bonds. And of course, if you have higher interest rates, why would you want to put that money in stocks, right? You would just put that money in the bank. You get better returns. So I think when that happens, we'll see the hell break loose. So that will definitely affect crypto as well, but by how much, I don't know. But I think interest rates is one bigger threat. And the other thing is Joe Biden came up with a plan. It's called American Family Plan. They're talking about taking tax cut from rich people to give to people with lower socioeconomic level. And they're saying if you have more than $10,000 of the crypto in your account, you have to report it to the IRS. They're gonna do the same thing in Australia. Mark my words. All right, it's gonna follow up with all the G7 countries. So if you're trading crypto, IRS or the ATO is gonna take 50% of your cut. No questions asked. The only way that you will survive is if you're hodling, but if you're trading, you are in danger. So I think those decisions and laws will affect the crypto market as well. But in the longer term, in the macro perspective, maybe 10, 20 years, I think eventually Bitcoin will be a major player in the global economy and currency. But in the short term, if I were you, like people are trading, I know these are newcomers. They got some money because they get the stimulus checks from the governments and everything, and they're buying this and that, Shiba Inu, this and that. I think you gotta be very careful. Like that's why I tell people, like whatever you do, have a stop loss and take out your profits and just keep rotating money, but be careful. So what do you think about that? That's a lot of information.
Yeah. Yep. No, I tend to agree. It's very interesting. I mean, the macroeconomics play a big part, and as you said, interest rates are incredibly low. I think they might be zero in America, like at the federal level, something like that. Like
0.01 something. Really?
Yeah. Consumer might pay a small percentage more, but as near as makes no difference. They're zero, and I believe that the reason the Fed are not increasing them is because they're trying to help the economy recover from COVID. So, they've been pumping money into the system. Last time I checked, you brought up the graph there from Fred, which is the Federal Reserve.
Yeah.
And that last little spike at the end, that parabolic run up in 2020, that's about, last time I checked, about 2 weeks ago, that was about a 32% increase. So
$2 trillion.
Yeah.
That's a lot of money.
Exactly. So it's very interesting. So we've got 32% more money in the system over the last 12 months than has ever existed. Interest rates are low. We did have GDP. So, basically the productivity was dropped during COVID because things are shut down. But now that GDP is starting to bounce back, and we'll have to see what happens with the Delta variant, but with vaccinations, it seems like we're still powering on and businesses are generally staying open. So you've got productivity getting back to similar levels to where it was in the past, but we've got an extra 32% more money in the system, and interest rates are low, and we're still mid-cycle. So that 4-year cycle that I was showing before with the macro markets, we're about 2.6 years into that cycle. So there's still another year and a half to go. So it's going to be a very interesting time. And I believe this coming week, there's going to be some more macro figures being released by the Fed.
Yeah.
So we'll have to see how the markets react to those figures. But if the markets get brought down, or if there's a scare in the market, then crypto will be affected as well. So it's something we need to keep an eye on.
Definitely. And then we have to look at Ethereum. One of my favorite coins, actually. I traded Ethereum. I should have bought Ethereum when it was at $400. I don't think it'll go to $400 again. But if it does, buy even at $1,000. Hold on, let me put on the Ethereum chart. This one. So I got the trusty Fibonacci tool. Fibonacci is actually a really great tool for use. Like if you're trading specifically, it's really good. So with Ethereum, they're doing a lot of updates in their network. As you know, Ethereum is a network, right? It's like Facebook, but it's decentralized, and they're doing massive updates. That they're burning the excess amount of ETH. They're kind of doing a supply shock where they reduce the supply and that increases the demand. This is that's what we are seeing over here. This main upgrade actually had a huge impact on the price, and of course Bitcoin is moving. So Ethereum, I think everyone is saying that Ethereum will surpass Bitcoin. I agree with them. I think there's a huge chance because Bitcoin's applications are considerably lower than what Ethereum can do. Ethereum is massive. If in the long term we'll be able to actually do more things. It's kind of like the internet. So I think when Ethereum, if you guys are hodling Ethereum, do not sell Ethereum. You will see some downward action in coming months. No matter what, do not sell your Ethereum. If you're trading Ethereum, I'd say now's the time to exit. I'm pretty sure if you had gotten in over here, there's a triangle over here, and we broke the triangle at $2,100. If you had bought this dip, you would have made 83%. I actually know people who bought this dip, and they're actually now thinking of selling them because trading and investing are two different things. And what I like about Ethereum is the volume is actually better looking than Bitcoin. You could see some of these big bars. When you see a big bar like this, it basically means that institutions are buying in. Even with Bitcoin, you see these long green bars. Those are institutions. So they're pouring in massive amount of money. Retailers can't get that kind of a volume. And me personally, I want to buy Ethereum. Hopefully, I think I'll enter Ethereum at this support level, which is $1,400. This was the previous peak. And right now, if you look at the previous cycle, we are seeing a bull trap. I think this is a bull trap. I don't know how far this will go, but this does not look really healthy to me. Like a parabolic move up. When there's a parabolic move up, it usually ends up coming down. So for people who are getting in right now, I think they'll get wrecked. But for people who got in earlier, I think they have made some really good gains. You have any macro perspective on Ethereum?
Yeah, that's really interesting. Just while you're talking, actually on my own screen, I brought up the same chart. I did a fib on both to compare, but with exactly what you've got on your screen. So we're thinking along the same lines. I just wanted to see how it compares, how the current chart compares to 2017.
Yeah.
And this is what I like about the fib charts. So a lot of traders use them and rely on, like, if we hit the 618, it does this and does that. But the way I like to use them is to compare different cycles.
Absolutely.
So if you can just squeeze it in so we can see both on the screen at once, the 2017, just like you had a second ago, so we can see 2021, just sort of squeeze it in. Yep. So it's very interesting, so we can compare where we are and where we've been. So I just like to look at the colors and keep it really simple.
Yes.
So you can see there that we've, in that gray section down the bottom, we have back in 2017, we did bounce down in that, it was 2018 by that stage.
Yeah.
We did bounce down there. Yep. And we've done it again a couple of times. We've actually bounced 3 times in that gray section, and it's towards the top of the gray section. We haven't gone below that.
No.
And then in 2018, we bounced up. We had a couple bounces. One time we bounced into the red. Another time we bounced into the light green near the top. We just got into it. And that final bounce got to the
0.5 fib. Yeah.
So this time looks similar, but we've bounced at slightly different levels. But it does have a similar looking pattern, doesn't it? We had the major peak, which was a blow off top that everyone was saying with Bitcoin, where's the blow off top? Well, it looks like the blow off top wasn't with Bitcoin, it was with the alts and specifically Ethereum. So there it is. We found it. We finally found the blow off top. And so we've had the blow off top. It came down. We've had a couple, they look like dead cat bounces.
Yeah.
And now we've had another rally, which has gone above those.
And now, it kind of resembles this one or this one, is it?
It does. Now, there's nothing in the laws of physics to say we can't have another all-time high straight away, or even a double top. That has happened in the past. It happened with Amazon back in the .com era. They had a double top.
Yeah.
So Amazon dropped 59% and then rebounded and had a double top.
Speaking of Amazon, I saw this news article during those .com bubble. Amazon stock went to about $2. Imagine if you had bought $1,000 worth of those shares, you would have been a millionaire, right?
It's a cautionary tale. It's so fascinating because Amazon dropped. Yeah, it dropped after the .com. So it had a double top, and then it dropped 94%. So even Bitcoin doesn't drop that far after a cycle. Bitcoin only drops about 80%, 82. But it dropped 94%, and then it took a decade. I think it was about, I can even bring it up while we're talking.
Yeah.
It took a decade until it reached that all-time high again around the year. I'll bring it up so we can see.
Yeah.
But it took a decade. So if you bought the top of Amazon in the .com bubble, you had to wait a decade until it got back to that same price again.
Do you have the chart?
But if you did, let's bring it up. So Amazon. Okay, so I'll bring this up on the screen. All right, so we're looking here at Amazon, and you can see I've been drawing this stuff in. So this is the double top here. I'll change it to I might make it a weekly chart because we've got decades worth of data here, so it just makes it easier. Okay, so we're looking at we're in log. I'm going to take it out of log. First of all, before I take it out of log, this is since 2007. The great financial crisis.
Yeah.
And look what Amazon has done. So the .com bubble was there. That's the .com bubble for Amazon.
Wow. Yeah.
And that's where we are now. So it just gives you an idea of how crazy this market has been. So this is what we need to look at in terms of the macro markets. How long is this sustainable for?
That actually resembles that chart from the Fed. It's like Amazon took all the money that's been printed. It's crazy.
It's unbelievable. If you think this is crazy, you should see Tesla.
Oh,
but,
Tesla. Crazy valuations, not worth at all.
Tesla looks even higher.
$900 for Tesla?
Tesla's crazy. So this has all happened in the last decade. It really kicked off around this area here. Yeah, 2008, 2009. So this has all happened. So anyway, let's have a look at this double top, because this might, for those that think that Bitcoin and crypto markets might have a second peak, this evidence here is what we can look at to compare against. So this is Amazon during the .com bubble, and if we look at the percentages here, so price range, so we went up about, what was that? About 4,000%.
Wow.
So that's quite a lot. Okay, so it's gone up as, these are in the same realm as crypto. And then from this peak here, we dipped 57%. And then we went back up again, and that was 139% jump. And in terms of the amount of time that it took to do this, between peaks, we're dealing with a weekly chart here, 33 weeks. So 231 days.
Right.
So, and currently with Bitcoin, we are, to give you an idea, 231 days. So date range from this peak, it's still, I've got to zoom out a bit here. If we copied the same thing, so it was it 33? Did I say
33?
Yeah. So if we reached a double peak there, and that looks entirely possible. That's essentially that's essentially what Amazon did. It took that amount of time. It took a 57% drop. If we look at Bitcoin's drop was from the peak down to here was pretty much 56%, pretty much the same percentage. So there is a precedent. this has happened before, and that's the only example that I've found. But it has happened before where a market has gone up this type of percentage, it's dropped 56, 57%, and then it's gone up and reached double top about 33 weeks later.
Right.
But then look what happened to Amazon next. Is it dropped?
It had a massive winter.
It did. Yeah. It makes it's a 94% drop, and then
wow.
In terms of winter, like we think crypto winters are bad.
Nah.
If we measure this date range from this peak to where it surpassed that all-time high, it was 3,600 days. That's 10 years, almost exactly.
Wow. So if you had like $100 and you bought it at the peak, during 99, you almost lost $90. You only had $10.
Yeah.
And for you to recover back to $100, it took a decade. Wow.
Yeah. But look what happened next though. So we're here in October 2009. Look what it did.
It just shoot up.
So this is a cautionary tale. Like, it's still going.
I think it'll go further up.
This is crazy. This is like, in terms of a bull run, look at this. It's still going. I can't even find the top. And there it is there. So if you had held on, you only have to wait 20 years. But the question is, could this happen to crypto? Could we have a 10-year crypto winter? Like, I don't want to like ruin the party, but it has happened before. It happened with the .com bubble, and the internet was kicking off. This is the year 2000 when the internet was the next big thing.
Yeah.
Why did it take 10 years to get back to those levels?
That's Amazon is like, and the other thing is like you spoke about Tesla, right? Let me charts with Tesla.
You can share your screen if you like.
Yeah.
I'll stop sharing.
So Tesla, look, people might say, oh, you hate Tesla. I love Tesla. I think it's a really great company. I love Elon Musk. And I love their business model. It's very, they're the first one to actually go mainstream with electric cars. I've drawn a couple of things, ignore these things. But when it reached $900 at the beginning of this year, everyone, even my landlord, he's like, you know what? I'm going to buy Tesla. Tesla is it's going to go to 2,000, 3,000. Kathy Wood came out and from the Archimist said that Tesla's real valuation should be somewhere around $2,000, right? And what happened? We had a massive dip down, I think 37%. If you guys can see this, 37% dip down. So if you had bought over here, if you had put $10,000, you lost $3,700 already. And the thing is, it'll keep going down. Tesla for $900, that valuation is crazy. Because if you look at their papers, like financial statement, they don't sell enough cars to get a $900 valuation. Toyota makes more money than Tesla. Apple makes more money than Tesla. But this is, I think, all of the hype. But I think for Tesla, I'd give it like $400 valuation, which is fair enough. Assuming these area is really good. But 900, that was crazy. So in the stock market also, we are seeing these massive valuations. I think that's mainly because the government is pumping money out to the economy. And I think with Tesla, if you're talking about Tesla, we'll reach this neckline and then we'll see down. So most people these days are shorting Tesla, like Michael Berry and all these really pro traders with big money. They're actually shorting Tesla. So if you're thinking of buying Tesla because Elon Musk is everywhere on Twitter, I would not recommend that. I don't think it's a good idea. What do you think? Yeah,
so it looks like Tesla, it looks like it's found some support on that moving average. I'm not sure which average that is, but I mean, markets generally go from being overly optimistic and then they become overly pessimistic. But Tesla seems to maybe have found a bit of a middle ground there where it did get a bit overextended because everyone got excited.
Yeah.
But then in 2020, we've had a chip shortage, which has affected the motor industry. So, they can't make as many cars.
No.
I know the auto industry has been suffering because of the chip shortage. And on top of that, Tesla, as you mentioned, compared to its earnings, it's vastly overpriced. And I was just looking up its they call this the PE ratio, which is the price to earnings ratio. So it kind of gives you an idea of the price of the share versus the earnings of the company. And like all throughout history, having a PE of about 7 to 15 is kind of normal. And right now, the overall S&P 500 has a PE of something like 48. I haven't checked it in a couple of weeks, but something crazy like that. And Tesla, I think, is like in the hundreds. It's
wow.
It's like 245 or something. So it's crazy. So it's vast, as you're mentioning, it's vastly overpriced for what it's earning, but it does have a promise. It has that promise of the future. And I think that's what people are investing in. So they're not buying it for today. And it's like Cathie Wood, she's buying it for future, the next decade. But we may need to wait 10 years until it catches up to the earnings. So the price may fluctuate and go up and down a little bit. But for me, I just can't buy it at these prices. But how many people have said that throughout history, and then it quadruples and 10x's from there, and they go, I should have bought it. Yeah. So we'll see what happens.
The other important chart I want to show you guys is this. This is called the total too. This is without Bitcoin, the entire altcoin market cap squeezed into one chart. And as you can see, like we went to a $1.4 trillion valuation over here, and we topped out and we came down. And to me, this looks like a classic Wyckoff accumulation. Even with Bitcoin, in my previous videos, I've talked about Wyckoff. It's not something that you should disregard, even though it's so mainstream these days. If you look at it closely, it sometimes makes sense because always the rich people they're controlling the market. We don't have that kind of money to affect markets. So if you have billions of dollars, of course, I would be manipulating the market too. If I had billions of dollars, I'd be doing that too. So the altcoin market it's following Bitcoin. I think like Tim said, we might reach a double top over here. But if that happens, it'll definitely come down. And I don't know how far it will go. But I think with altcoin, the biggest threat is Bitcoin. Bitcoin actually crashes, I think we'll see altcoin going up. So all the people who are holding Cardano, Shiba, and Matic, Solana, all these altcoins, I think you will have to be patient. If you're hodling, that's good. You don't have to worry about any of these things. But if you're trading, you have to be very careful. I would not be trading altcoin at the moment. But Ethereum and Bitcoin, yeah,
it's interesting, isn't it? You mentioned before about Ethereum and how you're bullish on Ethereum long term, and I agree. I think Ethereum, out of everything, has the best fundamentals. Like it has the most promising future. But it's interesting how Bitcoin and the alts, they kind of need each other. Yeah. So without Bitcoin, the alts would be nothing. But Bitcoin needs the alts because, as you mentioned, Bitcoin doesn't do a lot. It's a store of value, which is fine. It's decentralized and it's secure, which is great, and it's also because it's a simple it's a simple system. People know what it is, but the altcoins are what like especially with Ethereum, that actually does something. It's a platform for DeFi and for games and all sorts of other applications. So they kind of need each other. It's very interesting.
Because Ethereum is like the early days of the internet. Like I remember my father, like I don't remember, I was born in 1995, so that was when the internet was like becoming a thing. I remember my father was telling, oh, there's this new thing, like when I was really little. Of course, in Sri Lanka, we don't get everything really fast like America or Australia. So it's just like, to me right now, people talking about Ethereum is kind of like my dad explaining me internet back in the day. So I think Ethereum will be, long time from now on, will be the decentralized version of Ethereum internet. Because right now internet is mostly governed by these big companies like Google, Facebook, and Amazon, Alphabet. It's not technically decentralized. The internet that we have right now is mainly controlled by those heavy companies. But Ethereum is actually the solution for all of that. It's decentralized, and like you said, so many practical implications, more than Bitcoin. I think in the long run, Ethereum will follow past Bitcoin. Hopefully.
Yeah, I see Ethereum as like the Apple what's it called? The Apple App Store. That's the one. So it's like a platform, and you've got different applications that build upon it, and you use Ether as the native token. ETH and so one thing they talk about in investments is a moat. So if you hear like Warren Buffett's, he talks about this a lot. But a moat is where a company can basically lock in its customers. So like Apple is a perfect example, because if you get into the Apple ecosystem and you buy a lot of applications, you essentially get locked into that ecosystem. If you want to move from Apple to Android, then you need to rebuy all those applications on another platform. So that moat kind of locks in its customers. And like Ethereum doesn't really lock people in, but because it has so many applications that can interact using its native token, it does create a really strong ecosystem. And at the moment, it is definitely the strongest ecosystem for crypto. So it is kind of modeling that same approach to what we've seen with the Apple App Store, which revolutionized applications being developed on a platform. So we'll have to see how it pans out, but it's definitely way ahead of the likes of Cardano and Solana and those other platforms Avalanche, at the moment.
So the thing with those Cardano, Solana, and Avalanche, specifically Solana and Avalanche, they're like stepbrothers of Ethereum. So those, I think Ethereum is the first one out there trying out new things, and Cardano and all of these things are adapting from what Ethereum is doing, because it's like Ethereum is Michael Jordan and Cardano is like Kobe Bryant, right? So Kobe Bryant is like a copycat of, I love Kobe. He's basically like a brother of Michael Jordan. You have the GOAT, and then Kobe, and then of course you have LeBron as well. I'm talking about basketball. Of these other small ecosystems like Ethereum, they're mainly looking up to Ethereum and taking all the information, because they're the ones who are trying everything and failing and passing. So they give out a lot of information for these smaller ecosystems. I don't think Cardano and all of these things will surpass Ethereum, because Ethereum is out there like cutting edge. They have the technology, they have the money. So that's why you definitely should have some Ethereum in your portfolio, but do not buy right now, in my opinion.
But and speaking of Cardano, what I really like about Cardano is the fact that they're going into Africa. And when that news came out, no one cared. The news came out, I think it was around, it was before the pump, so it would have been in April or so. There was news about Cardano making deals with the African government, and the price didn't change. And I think it's underrated, because what Charles Hoskinson is doing is he's going after the markets that don't have banks. So there's I can't remember the exact figures, but it could be 1 billion people, something like that, are unbanked in the world. And whereas the developed world already have a banking system, and it's not perfect, and there's a lot of advantages to what crypto brings. But we still have one. But there's a lot of people that just don't even have a bank at all, and they don't have an identity either, like a digital identity. Like they can't prove who they are. It's very difficult to get a job or get a bank loan if you can't prove who you are. And so blockchain technology and Cardano are basically aiming after that market. So they're going where the demand is. And I mean, if you look at countries like Ethiopia have had the greatest growth of any country over the last decade. And I haven't looked into it in the last couple of weeks. I know they're going through some turmoil with some like war or something going on at the moment, but which is probably affecting that. But these African countries, the developing world, that's where the demand is. And just think about with crypto, we want to buy low and sell high.
Yeah.
So why don't we buy these? Why don't we invest in these developing countries, and then we can sell high? It makes sense rather than the developed world who's in debt. True. Look at America, $28 trillion in debt, and they're pumping money into the system, and everything's been so inflated. It's at the top. It's at the top, ready to crash. Maybe we should invest in the developing countries that are at the bottom that are making all-time highs. So I think that's what Cardano is actually working towards. So that fundamental is something really critical. So it'll be fascinating to see how Cardano goes over the next decade or two.
That's actually interesting what you said, because I've been listening to these Bloomberg Markets. There's a channel on YouTube, and there's another channel called Kitco News. They talk about this economic. They invite these hedge fund managers. They say that if you want to invest your money right now, emerging markets have better returns than NASDAQ or the Dow or even ASX. Even actually ASX is better than NASDAQ right now. Like you said, like they're not inflated. They're still developing countries. So you have more opportunities over there. And Cardano making that choice going to Africa. Whereas we see El Salvador adopting Bitcoin as a legal tender. Which is really important. I think you see these countries jumping into crypto because of those reasons, like not having banks. I think we'll see huge opportunities in crypto world. So exactly what you said. Could you pull up the Cardano chart and we can actually?
Yeah,
I haven't looked at
Let's
Cardano.
Have a look. Okay. All right.
Let me stop sharing. All right.
All right, so I'll bring this up. Just one sec. We can edit this out. I'll just bring it up to daily.
Yep.
I haven't looked at Cardano for a little while, so this will be interesting. So,
yeah, I know. Me too.
Candles. All right. And I'll just change the moving averages. Actually, I'll put on a fib. All right. Okay, so let's have a look at Cardano.
Oh, wow. It has gone up.
Yeah, so I'll put on a fib chart just to give us some perspective. So I'll just grab it from the bottom. I like to just see the entire cycle. So this is from November 2020, right to the top. And it gives us an indication of where we are. So that was when Cardano was 10 cents at the bottom there.
Right.
I mean, you can move it up to like to here if you like, but I'll just keep it down there at the bottom. Imagine Cardano at 10 cents, or it was 2 cents at some stage, like during this crypto winter, you buy Cardano at 2 cents.
Wow.
It's hard to imagine, but this is where it is at the moment. So you can see here, this section here, this is when the African deal came out. It was somewhere in April, probably around this time.
Right.
Maybe that caused that little pump there. I'm not sure, but it didn't do much. And this is also the previous all-time high. So if I zoom out, you can see if I just draw a horizontal line.
So we see a lot of support in that region, right? What's that? $1.3?
Yeah, that seems to be where it is. So that's the previous all-time high. So you can see what was interesting with Cardano is that it shot up, like this part here. It just went, it got up to the previous all-time high very quickly. It just went straight up, and I'll just measure that price range. So from here, what was that? That was a 250% increase, and then it went sideways because it shot up so quickly. The moving averages, like if I put on a
200-day or
I'll try 50 day.
Yep.
That's what I always like to look at with Bitcoin. So you can see it's very interesting, but basically it got away from the moving average, and because it moved up so quick, it had to go sideways to catch up with it. So
it went sideways for February till August, like that support 0.5 Fibonacci, which is the $1.331. Like you can see that level has been tested many times, and it always comes down. So that's like the median level. There's massive support over there.
Exactly. So the previous all-time high, as you mentioned, several months of support there, and then we had the blow off top. So here again, there's the blow off top for ADA, and then it came down, and then we've had these sort of dead cat bounces, and now we're having another rally, which is looking strong. And currently, it's about the same height as that previous dead cat bounce.
It might come down from here.
Yeah. And that's the thing. We're at a very interesting time because it's everything has been so strong. And is that wave one into this sort of thing, or is it another dead cat bounce? And we won't know, but the news that comes out this week may give us an indication of which way the market goes, but it's hard to tell.
One thing that I noticed is the 0.6 Fibonacci and 0.3, like Cardano, if you draw like two trend lines between them, you will see like it's actually bouncing between those two levels.
Yeah.
For those guys who are trading, actually, you can start buy at 0.6 and then sell at somewhere around 0.32. I think if you measure the ups and downs, I think we'll get about like a 40% average.
Okay, I'll put another one there. Yep, it's 50 in that 54%, but doesn't always, it just wicks to the bottom, doesn't it? It doesn't tend to get there. It's
doesn't
from
touch
this
that,
to that.
It's
about 40. You're right. That range there is about 40%. Yep. So 40% up and then
40 down.
Something like that. It's interesting, isn't it? So it's 30% down. I don't know how the mathematics works with that, but yeah. So that's Cardano. So does it go up or down?
Cardano actually have been going sideways for months. Like this entire from February to now, it's just, to me, it looks like it's in some sort of a consolidation state. So that means that usually there's a big move coming up, hopefully to up. People are saying, oh, Cardano will go to $10. That was the previous sentiment before the massive crash. But for Cardano to go to $10, their market cap has to go past $1 trillion. So it's not impossible, but it's a crazy valuation.
Yeah. And Cardano is a little bit like Tesla in that it's promising a lot, but it hasn't delivered. Hasn't delivered
exactly.
yet. Yeah. So it's still based off the hype.
Yeah.
And we can see there is somewhat of a trend line here. I'll just change the color of this so it's a bit easy to see. Just looking at these closes. So I'll just change that I'll make it black. There is somewhat of a trend line happening here. And now the worry for Cardano, and if I change this to a weekly chart, it might emphasize it more. Oops. Weekly chart. Is there's not much support beyond this. So this is where all the support is. So if it breaks, this red line, and you can see what it's done. It's gone down, it's bounced like this, and it's up here. So it may keep going up high, but if it bounces, if it breaks that line, it comes down to here, and there does seem to be a trend line. There's no support. There's no support. There's no support until down here.
It might go to zero.
Well, this is where there's a little bit of support. That's one. Yeah. I mean, it's basically 3 weeks of support down at 40 cents. So, I mean, there's a lot of hype about it, but if it gets some bad news and gets delays, and this is the trend line to keep an eye on. It seems to be something we're following so far.
Could we zoom out and find the previous cycle and find out whether there will be support? like
Good.
2000.
Yeah, good point.
So
Good
that
point.
peak over there, I think that would
Going to
be
log.
the
Going to log
May.
form.
Yeah. That's better.
Let's make it weekly because it might. It might give us an indication. So let's have a look.
So that May 2018 peak, I think the fake bull trap, that could be, there's resistance over there. So previous resistance becomes later support. That's what 0.8, no 0.37.
So which part here? This one here, or
now I'm talking about the peak in March to May. There's a 2018, not 19.
okay, 2018. Yep, this one here.
Now go to left. You see that dead cat bounce, the previous peak.
Okay.
That one. Yeah, that one.
That one there. I see. Oh, yep. There is a little bit of, yep. There is some there, definitely. So, and that's right there at that 40-cent mark that we looked at. So that is definitely a spot to look at, and you can see the trend line is. This is in log form, so it looks a bit funny, but if we do drop below $1, it looks like it's free. It could potentially free fall until about that. That's probably the most likely support. So there's no harm in putting in some buy orders down there. And even if it just wicks down there for a second and bounces back up, you may be lucky. So that is a
40 cents
spot.
is a good price for Cardano. That's true.
That would be good. And it's been in that range for so long. That's pretty strong. But if it does break, then there's not a lot of support until that point. So yeah, that's where
I just noticed something. So we are seeing a cup, right? Like cup and handle sort of a thing on the weekly chart. Maybe change it to line charts instead of candlesticks, and you will see the cup.
Turn this moving average off.
You see the cup?
So okay, so whereabouts are we looking?
So the entire picture from 2018 peak to the current peak, it looks like a cup. And then if you are correct, if we go below that 0.6 level, we'll see the handle. So I think that's a massive bullish signal for Cardano.
Yeah, it's unlikely that you think it'd be very unlikely that we get down to these type of crazies.
No, I don't think it'll happen.
Yeah, and we have seen that. We've seen with Bitcoin in the past that there's always a rising floor. So the bottom of Cardano was so if we count this sort of area down here around the 10 cents to 5 cents, that was the bottom. Maybe that's the bottom moving forward. And, we spike up, but then we come back, and then next time around, maybe that's the bottom. And like every cycle, we the rising floor, that's the bottom. To that's the bottom. That's the bottom. But we spike up every time. Yep.
I would definitely buy Cardano at 40 cents if it comes down. It's not a bad project. They have good fundamentals, like you said. In the long term, I might put like $1,000 and just leave it and forget about it.
Yeah, I think, as I was saying before, with those fundamentals, I think that's so strong if they pull it off. And as I said, we haven't seen the working product yet. So if we see it, then and it does what it's supposed to, then yeah, it should definitely have a real impact on the world. I think
it will.
We have to be patient. This is where I guess the difference between trading and investing come in, because it's not going to change the world this week or next month, or even probably next year. It may change how the unbanked are working in some of these developing countries over the next decade or the next 2 decades. So we need to have that sort of longer term outlook, and you can still buy some and sell some. Sell the peaks, like whenever it overextends, you notice
there are plenty of trading opportunities.
Absolutely, yeah, exactly. You can always buy back. So whenever we overextend beyond these moving averages really far, they're good opportunities to sell, and you can always buy back. And that's probably what smart money is doing.
Exactly.
The institutions and so forth, when you see them buying here, they're only buying because they've just sold recently. They may not be buying, getting into the market for the first time. So, yeah.
All right, so I think we've reached the hour limit. We'll do one more, like we'll do Dogecoin, and then we'll say our goodbyes. And yeah,
sounds good. Do you want to share your screen for
Dogecoin?
For Doge, I haven't looked at Doge for a while.
I love Dogecoin.
Yeah.
All right, guys. So we are looking at one final chart, Dogecoin. Of course, the broadcast is almost an hour. We'll do this one, and then we'll say our goodbyes. And we'll of course see you guys in another video like this. Actually, I love the market scans. This is actually fun. It's been fun.
It's good.
So I'm looking at Dogecoin. Now, this is Elon Musk's love child. He talked about this a lot, tweeted about this. You can see these peaks actually, that they're all because of him. I think this coin was one of those meme coins that was not supposed to come out, and he single-handedly pumped it out and made it a thing. As far as an investment, I think a good example that I could tell you is Mark Cuban, the billionaire. He owns Dallas Maverick, and they're giving out merch in Dogecoin. So you could actually, if you have Dogecoin, you could buy merch in America. So you have a lot of restaurants that are adapting Dogecoin using as a currency, because we can't really use Ethereum and Bitcoin as a currency, because I think the way that these coins are headed, Bitcoin and Ethereum, is more like a store of value. You can't actually use these as a currency per se, but you have Dogecoin, I think will be useful as a currency. So I don't know from an investing standpoint whether this will convert into a store of value like Bitcoin, but as a currency perspective right now, it's looking good. So as you can see, we are seeing a small break over here. We had this massive downtrend, and we broke it over here, and now we are going up. But I don't think this will hit these highs again. But I think I like Dogecoin as a currency, to be honest. But if you want to trade this, I would not be buying this right now. And you should have bought it over here and then sold over like 10-15%. Oh wow, that's like a 30%. Yeah, it's not a bad game. What do you think about Doge, team? Interesting asset.
Yeah, no, I think it's been interesting. Like I think it was the MVP, I believe. It was one of the MVPs for this cycle in terms of how high it went up, and it was pumped up. It was all hype. It was all marketing. It was all a bit of fun. But I think that's something that Elon talks about. He says that, you know, when you've got a new technology like crypto, having that sense of fun and the excitement and the hype, that's a big, you know, it's a big part of it. It's same with Tesla. Like if if Nissan were making electric cars and just were keeping it fairly quiet, there'd be no hype. You've got Elon talking about Tesla, and they're making crazy looking cars, and he's making cars that drive incredibly fast, like ridiculously fast, like it's impractically fast. And he's doing that because it's fun and it creates hype. And that's exactly what he's saying in Dogecoin. So it's fun, it creates hype, it creates excitement in the market, it brings people in, it brings retail in that haven't seen it before, haven't been involved in crypto. So it actually plays a really important part. And a lot of crypto people see it as like an imposter in a way. You know, it's inferior to other technologies, you know, and compared to Ethereum and all the other things that are going on. But it does have its role, and it had that massive run up, and it got close to $1. I think it was like 70, 80 cents. I can't remember the exact.
I think it went to a 70 cents or 60 cents. So and topped out and came down.
Yeah. Okay. So it wasn't quite as high as I thought. And actually that might have, because it's a weekly chart, it might have wicked higher and then came back down. And now it seems to be, if you change it to like there we go. 74. So it did wick up to 74 cents. Now it seems to be having a relief rally. Now it could go higher. Like we can't underestimate the power of the marketing and the hype.
No.
So the very things that pushed it up in the first place could be the things that push it up in this relief rally. Now it's risky because maybe it goes down from here, but maybe it goes up. So that's the tricky thing that we're finding ourselves in at the moment with the market is, it could go up, it could go down. And I know Charlie Munger, who's Warren Buffett's right-hand man. They do. And I can understand where they're coming from. Like if you look at, we haven't got time today, but I go through this on my channel a bit. I look at the Dow Jones over the last 100 years. And since 1942 to now, it's been basically a super cycle bull run. We have had moments of sideways action and crashes. We had a crash in 74, a crash in 2007 down to 2009. But for the most part, it's just been a massive super cycle bull run for 80 years so far.
Wow.
So I can understand why. And they were both born around, Munger was born 1924, Buffett was born 1930. So they were basically investing their whole lives in this massive bull run stock market. So I can see why they just prefer the stock market.
Yeah.
But now we're getting to these crazy levels in the stock market that it's kind of dangerous to start investing at those tops because it could crash. It could go the other way. So I can understand why they don't like it. But one of the things that Munger does say, and I think we should learn from these investors, he says that every investment is either a yes, no, or too difficult. And at the moment, I put a lot of these in the too difficult section. So they could go up, they could go down, you could lose money. As you mentioned before, maybe stop losses. If you want to get into the market, then maybe stop losses are the key, and just accepting that you may lose 5-10% of what you put in.
Yep.
To risk, making some gains. So that's where I see Doge at the moment. It's in that too hard basket, but if you want to get into it, then having a stop loss is the way to go. It's
highly speculative. So I'm seeing the head and shoulder pattern in here as well. That's why I switched to line charts. Line charts are really good to find out these patterns. So you can see there's a neckline. I think Bitcoin is also going to this neckline. So I think Doge will have a pump up. These 40 cents and then come down. But of course, I'm talking about probability. These head and shoulders patterns are really, like you talk about the Dow Jones, NASDAQ, they're really common throughout the history, and there's a higher prevalence of these kind of things happening, but it's not 100% accurate. Nothing in this game is 100% accurate. The stock market, the money markets are fluid. So we can't actually say the future, but we can look at the past, analyze the past, and get an idea. And because the future is uncertain, that's why we need to have a stop loss. Like so many people, like I remember I was talking to this guy, he's a trader, he makes good money in Australia. Of course, traders make crazy money here. He told me that he lost about $18,000. I was like, bro, you didn't have a stop loss. He's like, what is a stop loss? I'm like, if you don't know a stop loss, you shouldn't be putting massive amounts of money into crypto or stocks or anything. Especially if you're trading, you need to have, with the stop loss, you know exactly how much money you lose. But if you don't have a stop loss, it could just keep going down and down and down, and you'll go to a zero. So please have a stop loss if you're trading Doge, highly speculative asset. If you're getting in, I'll have a stop loss at around this support level. So maybe 10-15%, that's 27. But maybe 20%, but 20% can be a lot of money if you're putting $10,000. So depending on how much you're putting into the market, adjust your stop loss. And basically all of these apps do offer exit points. So you can just make it like an automatic thing. And then if the market comes down, you'll not lose so much money. And of course, exit at the right point, have an exit strategy. So like, think like I'm exiting at 30% or 40%, or maybe in this case, if I'm putting money in here, I would exit around 35, maybe 40% after gains, I would exit. So have that kind of a strategy so you don't lose money. The idea is to not to lose money. Most people don't realize that I don't trade at the moment because it's so much volatility. I'm saving up some money. paying off my debt, being ready to buy the dip. I'm pretty sure most people are doing that. And always follow the bigger guys like institutions and hedge funds. They're really smart. They know what they're doing. So that being said, we have to stop the broadcast. Thank you so much for everyone for listening. We hope that we actually brought you some valuable information, and of course make sure to check out Tim's channel. He talks about amazing content, talks about macro cycles, and I actually learned a lot from his channel. Go and hit the subscribe button, and of course check out my channel. I talk about crypto, stocks, money in general, commodities, anything. So we'll see you guys in another market scan. Until then, happy trading.
Thanks everyone. Bye.